Hey guys, this is Dan French. I'm talking about recession. I'm talking about what rates are doing. I'm going to also talk about where the market's heading and also what you need to look for. So, looking at the overall economy, right? So, guys, it's all been about recession talk, and I'm going to tell you why you should refinance your home during this time period. You look at the Fed's fund rate, they dropped that rate by a quarter of a point. Probably going to drop it again in September. Right now, I'm refinancing a ton of people getting calls every day. Emails every day. Hey, how much can I save on my payment? My rate is this. How much can I get? How much can I save on this? I'm saving people $200, $300, $400, $500 sometimes on their mortgage payment. I'm also doing cash out refinances quite a bit. $25, $50, $100,000 paying off student loans, paying off car loans. I'm paying off a lot of debt. You look at the Fed's fund rate and you look at all these things that's going on. Right now is a perfect storm for you to refinance your home. It's refinance season again. You know, you look at where rates are at. Low threes, mid threes. Guys, this is low. I haven't seen this for 5 years. First time the Fed's fund rate has been cut in 5 years. Right now, I would highly recommend giving me a call, 702-332-3532. I want to see how much I can save you on your refinance. I also want to see how much debt you got. A lot of people are paying off a ton of debt, guys. You look at what the statistics are. If you bought your home in 2015, you have a roughly 34% equity built into this home. Use that leverage. Refinance the money. Lower your payment. Rates are low. Call me, guys. Hey everyone, it's Dan French here, and I'm going to talk about, are we headed for a recession? And a lot of people that call me, they're saying, well, I'm not going to buy a home at this time. I think that the economy is going to fail at some point, and that's when I'm going to buy, and I'm going to look at that again. And look, there is no real picture about is the economy going and heading for a recession. We had a reason last time. The reason we had last time was we were writing bad mortgages. And so that was really the single factor, or one of the single biggest factors that we saw of why the recession happened in 2008. Now, if you move forward to today, you know, everybody's saying, well, we keep expanding. And at some point, if we keep growing, then eventually we're going to have a recession. Now, obviously, history has gone up and down and showed this. You also have to look at the fact that there's a lot more data that's gone out there in this day and age. And you have to look at the government, and also the Fed seem like they got a little bit more of a stronghold on what the economy does and how they can manipulate the economy. You know, you look at buying into, we had them buying into bonds. You know, the government, they bought bonds, and what that did is it kept rates low. You know, bonds, as far as the prices go, the bond price goes up, typically rates stay low. So if you're buying a high volume of bonds, then potentially you're going to see rates stay low. And when they talk about cutting the Fed's rate or the Fed's fund rate, this is another way to manipulate the economy, but also to manipulate consumers out there on consumer confidence. You know, we looked at some of the prices of homes and how that's gone on with consumer confidence. We still have a high volume of consumer confidence out there, and it shows. You know, so if you look at what is the economy doing and are we headed for a recession? Well, Australia has not had a recession in 28 years, and they've had growth for 28 years. Well, you could say, I know, Dan, well, you know, we've grown quite a bit and we're going up the same pace as we did last time. Well, but we also have a lot more structure in a sense that we know what's affecting things typically, and we know how a little bit better to really go in and manipulate what is needed so the recession doesn't fully come in. A recession is if you have 2 quarters where you have losses. You know, if the gross domestic product comes in for 2 quarters and we see losses on that, technically or by definition, we are in a recession. And so our economy is doing pretty well here, you know, especially here in Las Vegas. Like I said, we're doing very well. And so we can't really say that the data that is showing right now is that we're heading for a recession. Now, trade talks and the problems that we see with China right now, this could ultimately lead to a recession. We see a lot of things going on with investors, a lot of the Fed monitoring and looking and seeing what's going on with China, because obviously the cost in goods and services here could go up, and that could push people away from buying the typical things that they buy. And so what that could do, not only are they looking for inflation to be a problem, they're also looking at the cost of goods and services going up where people aren't spending money, and this could be a big problem. It also stems out to small business owners. So when you look at all of these things that could happen, small business owners and big business owners, the cost of maybe getting something like insurance for a typical employee, or maybe the things that you needed for your self-employed business is now going up and you're having to take alternate routes. A lot of these things happen, and this is what leads us to an economy that really slows down. Now, what really does define this as well is when you look at a 10-year Treasury note and they compare that to a 2-year Treasury note, these are the terms on these bonds before they become fully invested or fully amortized where they're due. They pay out after the 2-year or the 10-year time period. When the 2-year Treasury bond is actually higher than the 10-year Treasury bond, in past experiences, that has led to a recession. And that is something that's happening right now. And so you see a lot of fear. You see a lot of people looking around with the trade talks and with what's going on with China, and also the global economy slowing down. So these things are to monitor, because if we see these things consistently going on, this could head us to a recession. And so at this time, are we in recession? No. Does the data and the economic data here present that we're in a recession? No. I'm not saying that we are, but we do have some threat. We do have some things that could happen where it would potentially push us into recession. If we start to see gross domestic product going down, inflation on the rise, we may see some scaling back here. And if we see that, then obviously everybody is going to not benefit from that. It could last anywhere from 18 months or longer, depending on what happens, especially with these trade talks and with all this news that's coming out now. So as of right now, we are not. I don't foresee this happening in the near future, but that doesn't mean it couldn't happen. We could see this maybe a year and a half from now. In the foreseeable future, I don't see it happening. We just don't have the data. And these things do take time. It doesn't just happen right away. But if you look at what rates are doing, what mortgage rates are doing, at the next Fed's meeting, we're going to have another meeting in September. This could potentially be cut by another 1/4 of a point. There's a lot of prediction that this is going to happen. Why this happens is because the Fed is trying to manipulate the economy in the sense of consumer confidence, and also the short-term bond, which is tied up to student loans, car loans, all these other things that we all use as consumers here as Americans. We have now more money to spend. And they do that because obviously they don't see the numbers that they want to see as far as the Fed and what the data they've had in past, where they're trying to keep it at a certain amount or a certain level. And if they start to see that decline, that's when you start to see the Fed's fund rate being cut. That's why we saw it cut recently. A lot of it's to do with the tariff talk and the trade talks that we have with China. A lot of it is to do with the fact that overall spending is maybe dropped. Global spending and economic data and weakening economic data has also shown up. So if you guys have any questions, I want you to reach out to me. Again, this is just information for you to make best decisions for you and your family. Now, if you come and you ask me, is it a good time to buy a house? Absolutely, it's a good time. Why? 57% of people that had bought homes back in 2015, they came back and they have 34% equity in their home. That's a big amount of equity in your home in just a 3 or 4 year period. What does that mean? That means you're taking your money and making it work for you. The only time I would say it's not a good time to buy a home is if we're in a negative equity position where the market is going down, which we saw. That's obviously a recession. Or if you yourself just can't get into a house because maybe your credit's bad, you don't have maybe a sufficient time on your job. It's only because of those reasons. But if it's me and I have to buy a home, or if you're considering buying a home, never not put yourself in a position to buy a home, because in this market, the acceleration of equity that's going on in these properties, there's a lot of equity to gain from this. There's a lot of people cashing out on homes that they purchased 5, 6, 7, 8 years ago. I would always consider it. Right now, I'm refinancing quite a bit of people. I'm refinancing a ton of people, and it's because rates are low. I consistently think they're going to get even lower, and it's hard to fathom. We're looking at refinances right now where people aren't even asked to get an income documentation. They're not asking for any appraisal. It's just there for you, and it's there to really streamline the process to get you in a smaller rate and also get you into a lower payment. I'm telling you, a lot of people are paying off equity, large credit cards. Now's the time to do it. Rates are going to continue to get better, in my opinion. I think they're going to just get better before they get worse in this position, because I don't think they can go higher at this point. We're starting to see signs of slowing